an analyst, every time when they want to say add a number or run a function, they don't want to go back to that vendor, call customer support and ask for that bill. They want it to be built dynamically. They want to be more an agile perspective. So there is that kind of element. And we took that seriously in the design of Vectra, right? We're not trying to move them out of Excel. The biggest gap that remains unsolved at this stage is not only the Excel gap or the technology, it is actually the gap that it's the knowledge gap.
Welcome back to this GPT Life podcast. My name is Karthik and I'm super excited to have you with me today. I have an amazing guest with us. His name is Sadeq Safarini and he's the CEO of Vectra ML Analytics. After spending about 10 years in the finance space, he decided to get into the fintech and AI-based solution space. Well, I don't want to describe much about what he's doing because it's not as simple as what I just blurbed, because what he's building is something that's far more complicated. But what they're really doing is like what Figma did to design. They're simplifying how people who are in the space, the experts, the financial analysts, can go about really understanding what's happening inside big banks and the black boxes that has led to the fiascos of the likes of Lehman Brothers and Silicon Valley Bank. Now, I don't want to keep talking about what they have done because there is so much that Sadeq has to share about the product, the space, the industry, and about their go-to-market. And he also has a bunch of advice for a lot of us who are trying to build something with AI. I'm again super excited and I just want to get myself out of this camera and let Sadeq come in here. Let's jump right into this conversation with Sadeq Safarini from Vectra ML Analytics. Hey Sadeq, thank you for taking time to be with us today.
It's a pleasure. Thank you so much as well.
Can you share the story of what really propelled you to move from a senior role in a treasury and a securitization into founding a startup that to something to do with fintech and AI? Can you tell me the background here, how all of this really got started in the first place?
Yes, very good question. I'm a creative person. I've been working in the industry for over a decade. I've worked for all sorts of banks from smaller size to larger size across North America and Europe. I was based in London for 3 years. It's really it's a combination of personality and experience and personal appetite. As a person who has a sense of entrepreneurships, right? As someone who's been creative, I always want to take what I do, what I learn to the next level. And I couldn't really wait to see the opportunity where I got a handle on the industry, full understanding of the acronym, how things really work. Because in order to create the impossible, you got to master the possible. And after just really years of learning, deploying, running some kind of improvement internally, it was just about the time to take things to the next level and build Vectra ML Analytics.
It's interesting. Can you tell me really quick, if you met at a coffee place, how would you describe what you do today?
What we do is we're trying to revolutionize the financial reporting slash the financial modeling function in banks and lending institutions and bring it to the next level. Traditionally, these banks will link to internal systems such as like core banking systems, servicing systems, along with accounting systems. They will pull something called a loan data tape. That loan data tape will have, let's say, a list of IDs, loan IDs, let's say 001, whatever, let's say Alon Smith or something. And that person will, let's say, have a mortgage or a car loan. It will state the term of that loan. It will state the interest rate. It will state other characteristics as well, the beacon score and so forth. It's just a matter of capturing thousands of loans, along with also deposits and other funding sources, running all sort of analysis on it, simulations. For example, what if interest rate were to increase by 1% or 2% in the market? How is that going to play off in terms of reporting, in terms of asset liability positions of the bank? The traditional process was just gather data, plug in the assumptions, and then end up with a report.
Right.
What we're trying to bring in here by using AI and ML, state of the art, two things. We're trying to move the industry from a reporting based function into a recommendation slash advisory function. It's the technology, it's the AI system that will be able to optimize the scenarios, that will be able to run time series analysis, classification algorithms, and bring things further.
Wow.
But just in the same case with OpenAI, when they came up with ChatGPT, the technology did exist before, but it was just a matter of combining it with a chatbot that made it very powerful. We do have a lot of technologies built in the back end. We have deployed it on few banks, but it's still not in the form of a chatbot where we want it to be.
Hmm.
We are in the middle of a capital raise, which will be able to bring that, but I believe that will come in the fifth version of Vector 5.4,
Hmm.
5.5, 5.0. Yeah, that's technically will is technically the what's the vision and mission for this company.
That's really interesting. What kind of led you to going and starting this, turning this idea into a business today? Was it like sometimes we have a light bulb moment, like the Eureka thing, or sometimes you start working on things and over a period in time, your idea starts to evolve and you come to a point where you think, okay, now it's the time for me to go and do something about it. I'm curious which one of this camp you fall into. How did this all start? Was it a light bulb or was it an evolutionary idea thing?
I don't genuinely believe in the light bulb on a standalone function. I do believe in it as part of a whole entire larger ecosystem. There are two types of entrepreneurs: people who just randomly pump up into an idea, and sometimes these are valid ideas, like just Airbnb, right? Someone in just couldn't find a hotel, he crashed at his friend's apartment, and that was technically the birthplace of Airbnb. But that's most likely on the consumer side. So if we're looking at B2C, that's technically the case for most of the time. Even like with Uber, that's probably would have been the case. Someone couldn't really get a cab on time, and that was the birth of Uber. But when we're talking about more industrial products, more like banking product that the average consumer doesn't bump into them on a daily basis, right? Because the average consumer just walks into the bank, talks to the teller, applies for the mortgage, and he just goes home, right? Maybe
Right.
like at the best of their cases, it's just going to automate the underwriting process or the way how they go into banks, and that's what start with having neobanks. But if we're going to drill down and you want to look at the routine of a daily CFO, like what does the CFO deals with, reports and stuff like that. So that's technically something that requires the entrepreneur to have some kind of subject matter expertise in the domain. And then as a subject matter expert in the domain, working in multiple positions across multiple functions, start to get patterns and links, and that's pretty much where the light bulb moment pumps in, and that's technically say, aha, I see there's a gap in here. I've been trying to solve it. It's been painful. The pain is big. Definitely, there might be a market for it. I've worked for various banks. It's always been the same problem, and I think that's technically the main driver for Vector, at least.
That's very nicely put. I like how you framed it. I'm curious, what does vector ML analytics really mean? Is there a reason why you chose ML and not AI there? Like a lot of companies use vector analytics AI or something like that. What was the thought process there, very briefly?
Think of AI as United States, and ML is just as a state in that country, right? ML is a subset of AI. That's one. AI is a little bit more, previously in the past was more towards robotics. ML was more like statistical analysis, but it wasn't until the birth of OpenAI and ChatGPT that the word AI started to really pop up. If Elon Musk would have named it like OpenML, not OpenAI, then the word ML would have surfaced more. But it's just the idea came in 2016. At that stage, it was all big data science and ML, right?
Right.
We all understood AI, but that word was just reserved for robotics. So that's technically what it is, but it's the same technology from that perspective.
Makes sense. You position yourself, I saw this somewhere written on your LinkedIn profile, I think, as at the intersection of AI and financial services. I know there was a culmination of different problems that you started to see as an expert in the space, being in the space for a very long time. What was the biggest problem, Sadik, that you saw that you are trying to go after today? And why do you think, I think I want to put it in the perspective of today's economy, why do you think it's crucial for the economy today?
Technology, it's always been the main driver for innovation since the early birth of humans, right? All the form from the invention of the stick to the iron age to, I don't know, the coal stage of oil to communication, wireless communication, you name it, right? So there's been multiple phases of development. The transistor was one of them. That's where we start to see modern computers,
Right.
right? And we're able now to crunch thousands of numbers. NASA used them. But then we wanted something to be more user friendly and something that just not only rocket scientists can work with it. And that was the birth of the personal computer, Apple and early Microsoft and operating systems. So they've been, what I'm trying to refer to, they've been in previous history, there have been spikes in times of revolution. SaaS was one of them. Now, as computers are becoming more advanced, we saw this with NVIDIA's and the request for more chips, just there are now more capacity. The infrastructure is there to be utilized to analyze large data because the models that we're running today would have been impossible to run them 20 years ago. So it's just a matter, the technology is there, the infrastructure is there, just a matter of using it. And sadly, the financial institution or the financial industry is one of the most conservative. They're not the early adopters. Normally, you will see things like happening in Silicon Valley, California, autonomous vehicles, and then Wall Street would catch up after 10 years. So it's really bridging the gap between Silicon Valley and Wall Street at this stage.
And if I might go back to the same question again, I'm trying to understand here really. I know you're solving a problem space. I'm curious, what is the biggest problem? What really compelled you to go ahead and build a company around this? So, what is that one problem?
The financial industry in general is sitting on an ocean of unleveraged and used data, right? There's so much data that it can be used that it's just sitting there and people are not taking advantage of it. Larger banks, Goldman Sachs, these guys already have millions of dollars that are deploying in terms of that. So what that means is thousands of community banks, credit unions, and smaller financial institutions in the US are going to be at a disadvantage because just they don't have the resources to build something proprietary, and they are at the mercy of existing vendors building something that is suitable for them, faster, better, cheaper, and affordable, that they can take it. We do see a gap that the market is not offering a solution that easily can be deployed for smaller to mid-sized financial institutions. We see there's a lot of data, and we see that we can add a lot of value to like playing the or level the playing field at this stage.
Makes sense. Got it. One thing I'm really fascinated with founders is we have a lot of personal ethos and philosophies, quote unquote, towards technology, in this case, towards finance and things like that. How does Vectra ML Analytics reflect that from what Sadeq thinks or believes about technology and finance?
Technology is supposed to help humanity progress and develop. Economies supposed to thrive as a result. Sometimes we've seen where technology can go on the other side, but in the case of banking at this stage, we at Vector, we do believe in local economies. We do believe that local economies are the heart of the US economy. We're against centralized economies, so we don't want to see banking only in Wall Street. We want to see there should be a banking hub in Minnesota. There should be a banking hub in Oregon. There should be a banking hub in Texas, and so on. And the only way to do it is to help local community bank thrives. And the only way to help them thrive is to provide them with all the analytics that they need, not only for them to survive, but to compete with Wall Street. So I think that's where we're bringing edges is again, which what I've said, we're helping to level the playing field at this stage.
Beautiful. We'll get just in a moment to talking about GTM and value prop and all of those things. But first, I'm curious here, Sadek, I mean, kind of reflecting on your journey, what were the biggest hurdles that you have seen in moving from concept to execution? Because doing something like what you're doing is not just about building an app, right? It's far beyond that. I'm curious, what have you seen as the biggest hurdles, or top two or top one, perhaps, and how did you go about navigating them?
I think in generically, any startup will have to balance few things. They will have to balance sales with capital, with talent, with compliance, with other stuff as well, operation and all that kind of stuff. There are two types of startups. Most likely, which is the case in the B2C, you with a very little minimum investment in MVP, you will be able to secure your first customer. And it's very easy to ramp up revenue at that stage. However, the gross margin are very low, given the fact that there is a requirement to invest in sales and marketing. So to say, a startup that raises a million, it is possible that they would have spent $700,000 on sales and marketing for them to reach about $1 million revenue. In our case, it's very different. Since we're building an analytical machine that's most likely will act as a printing machine down the future because it's built it for once, there's certain level of infrastructure, compliance, data requirements, securities, So the threshold or the hurdles for building the MVP is a little bit larger. And it was quite difficult talking to investors and getting them to invest because the first question that says, what's your revenue? Are you revenue positive or not? So we were automatically at a disadvantage relative to any startup in the B2C that has a lower MVP requirement than us. But because I do believe in the system, I managed to bridge the gap for my own finances. So I did pledge my own capital, build the MVP, and secure the first customer. And then when I went back and I spoke to the investor, I did have a case at that stage, and I raised money that helped me with growth. But it seems to be this is always the case, which I always feel, because technically a lot of the VCs are industry agnostic.
Right.
For them, they don't really see the industry. They don't see, oh, you're in finance, this industry a little bit different. For them, if they see a B2C company that is securing double digit growth, they might go with it. And I keep talking about this because I believe that the venture capital world is the graveyard for a lot of ideas. But I also believe that entrepreneurs are the graveyard for a lot of VC money. So it works backwards. So you got to find entrepreneurs that you believe in, you can fund them during good times and bad times. But also the VCs, they got to find good entrepreneurs, and people have to deviate a little bit from revenue style from on the early stages. In year 3 or 4, that's not the case. But this has definitely been a challenge, managing sales, managing client relationship, investor capital for growth, because every single company in the early stages will definitely spend more than it earns. So that's probably worth mentioning at this stage.
Awesome. Is there a pivotal decision or a point that you can recollect that was critical in shaping the current trajectory of what you're doing with Vector ML? And it could be something to do with how you go to market. It could be how you package it. Is there something that you recollect, if you can, that led to you saying, this is how we're going to build this product and this business?
Yeah, this can be answered in different dimensions, right? So many people, they claim to, or at least have the dream of starting their own company one day. Many of them hesitate. They don't incorporate the company. They don't really invest the resources. For us, we did incorporate early, about almost a year before the MVP, and just that certificate, having a letter, a Delaware certificate that says the name Vectra ML Analytics, just puts a lot of motivation. That's, oh, well, now I have a company, so let me work on it. But if you don't incorporate it, just it's an idea in the air. I get it. Some people don't want to incorporate because it's old and stale, but you have to balance it. The second phase is when you feel that people are not jumping on the train, how much you are willing to put from your own money and really support that, because a lot of entrepreneurs are really hesitant into selling some of their assets and financing the idea, but that's technically filters out who really believes in what they're doing and who don't. And thirdly is even me as someone who understood the industry very well, just not only having to face a challenge of building something, but it's also putting the whole entire marketing infrastructure and really finding out what the customer wants. It's always been a challenge because sometimes you get into the bias. I've worked in the industry for 10 years. I exactly know what the customer wants. No, you don't. Because at that stage, you were just a user and you saw it from your own dimension. Someone else would see it from another dimension. So that's did cause us to go through multiple iteration points. Vector 1.1 was very different from 2.2, from 3.4. And today we have a product that literally it had nothing to look similar to the previous versions, and we'll continue to innovate, continue to listen to your customers. Don't ever get into the caught of what I call founder bias, and just listen to the customer, and the market will throw its intuition on you.
I love the way you answered that, Sadeq. Thanks for doing it. I think it's time for us to really get into and talk more about your. What I'm really curious is the sector that you've gotten into is super crowded, right? And like you said, it's not a new sector. The industry is not new. It's been there for a long time. I just looked up and it's 75 years. That's a very long time. And there are a lot of habits and in people, the way they use things and everything else. So I'm wondering here, what is your unique, distinct value that you bring to table for your clients at this point in time?
You're right. The sector is crowded. That could be a positive and a negative. Positive, that means shows that there is real demand for such a product. Negative, it means that you have to go through these competitors and offer something that other people um, don't have. Now, that's technically now put us back to the point where entrepreneurs who are about to launch their first product must see something other people don't see. They must have a new way or a new mechanism to find some kind of virgin land and get to that land. And I probably would use the analogy of inhabiting the northern borders of the US and the southern part of the borders, because if you want to live in Texas 100 years ago before the invention of ACs, it would have been like almost difficult. So the person who actually invented the first air conditioning machine made a lot of money because all of a sudden lands that previously been inhabited now is inhabitant. And same works for installations and heating and that kind of stuff, because there's certain areas in North America where I lived in northern Canada as well that it would have been impossible to live 100 years ago. So similar things when it works in analyzing banks. There's certain models that have been just impossible to analyze or use in previously, and we're going into these areas and we're making a lot of progress. One of the secret sauce we're doing is really building what I called an object-oriented library that can be easily reused and refunctioned, similar to what Figma or Canva is doing. I'm not going to go more into the details, but this has been definitely a revolution at this stage.
Wow. That brings me back to that big question. I think this is the right time for me to ask that, which is the industry that you're going after, your potential users are people who've been using Microsoft Excel for decades, right? You've been using, I'm sure, Excel for a long time as well. I'm curious, what is the first or the biggest objection you get, or do you get objections at all from people like that who believe that modeling needs to be done only with Excel spreadsheets to do it the way they have always done it?
Maybe they're right, and we're not trying to deviate them from Excel spreadsheet as a technology base. That's why when you look at Vector, it is very the UI UX infrastructure of Vector is very similar to Excel, and we made that very clear because we don't want people to deviate from Excel. When you live in a free functioning country, then that's great, but a lot of people will chose a democratic non-functioning system over a functioning authoritarian systems. So what we saw that although there are capacities for other SaaS products that offer much superior results than Excel, many analysts in the market were hesitant to use these tools because it takes the freedom away. An analyst, every time when they want to say add a number or run a function, they don't want to go back to that vendor, call customer support and ask for that build. They want it to be built dynamically. They want to be more an agile perspective. So there is that kind of element. And we took that seriously in the design of Vector, right? We're not trying to move them out of Excel. The biggest gap that remains unsolved at this stage is not only the Excel gap or the technology, it is actually the gap that it's the knowledge gap. There is seems at this stage there is definitely a lot of gaps in terms of the knowledge, and that's what we're trying to fill out of this, because it's really sometimes it takes more than a department and more than one subject matter expert to analyze this further.
Interesting. Can you tell me more about that knowledge gap?
Yeah, so definitely. So in terms of the knowledge gap, if you want to model, for example, a particular asset class, even if you are a very highly sophisticated financial analyst, you might not have seen all the asset classes. You might not be able to capture all the financial elements. It's just similar to for me to go and ask you to list all the words in the English dictionary. Like even if your English was very great at that stage, you wouldn't be able to list more than 1,000 words at once. So you're just being able to have that kind of library, a fully documented financial modeling library that has all the financial element of every single model documented and audited is seems to be quite beneficial, because you don't want to go into the boardroom every time and just start to debate how this is modeled and what are the best practices in the industry. So that's always been a challenge, and we at Vector we cover that.
Very interesting. I see what your value prop is. I see exactly where you're coming from, how you're positioning yourself to the people who are already using Excel spreadsheets and people like that. So I'm wondering, end of the day, it's the messaging that matters, right? And how you communicate all of this to your audience. You're doing this day in and day out, talking to customers, talking to prospects. How have you crafted your messaging at this point to communicate the, its complex capabilities of Vector ML to your prospective clients? What does it look like?
Yeah, in the beginning, we used to, in the earlier version of the product, we used to have more technical language in there, and we found that doesn't work all the time. And mind you, when you're sending these materials, sometimes these materials might land on someone that's just not a subject matter expert, and that's been the case, especially with a lot of like smaller rising fintech companies. We managed to redraft and reword the messaging to make it more generic and not make it more technical, and by focusing on the problem. For example, is do you have a problem, finding, let's say, the break-even point for the business, or do you want to, let's say, price? Do you have any problem, let's say, facing or pricing your loans, or do you have any gaps in the asset liability or liquidity process? Right? We're just trying to figure out what are the most common problems, and we managed to rank them and draft the messaging around that, and that's been very helpful in this.
That's brilliant. I think it takes me back to something you said just a few minutes ago, which is the product that you have today, version 3 is not anywhere, doesn't look like 2.0 or 1.0, right? It's evolved over time. Obviously, this has happened because you're constantly putting out your messaging, you're having these conversations. Is there something that you really noted at this point? If I asked you to jog your memory back to 2 and 1.0, is there something that really comes to your mind the day you sat with your team and said, you know what, I never thought about this? And it changed everything, the way you focused on positioning or messaging?
I guess it's a process of iteration, right? Like people don't change their messaging until they get a rejection. And a rejection can be in the form of no reply. So if you send, let's say, you're running a campaign and you email 100 bank and no one comes back, then you start to question yourself, what's really wrong? Is okay, this address this. Is the email being delivered? And maybe the message is right and the emails are going to spam. I don't know. But as an entrepreneur, you got to look at the whole entire thread, right? But assuming that the technology works and everybody read the message and people haven't engaged, then okay, they just question the message, and then after forms of iteration, we'll start to see some change in the level of open rate and the level of engagement, the level of reply, and that's been very effective at this stage.
This industry has been there for a long time, and there is so much that's really happened in terms of how we look at the industry is through the news. So Silicon Valley Bank, so many back in 2008, Lehman Brothers, so many things happen, and that's only the moment when we look. I'm talking about we as in people who are not in the space, right? That's when we realize what's happening with these institutions. And I'm sure you've been around for the last couple of years. So I'm wondering, have you seen emerging trends that you are starting to prepare to address in your product as well?
Yeah, there are few industries in the world that you just take for granted until something happens to them and then people question. For example, all the way from electricity to water supply, I just take it always for granted. Banking is just one of these industries that you expect that the banking system always work, that the bank will always give credit to people who deserve credit and things will be fine. But that's not the case because these highly sophisticated organizations are run by humans. Maybe from an operation perspective, things or the error margin has got quite low. That's from underwriting or account servicing. So it's very unlikely that the bank will double charge you for a mortgage payment or a car payment. But when it comes to asset liability management, when it comes to financial modeling, these things are still relatively not fully automated, which means that there is a decent level of human error that could affect the industry, and that's exactly what have caused 2008, because it was just the financial modeling of 2008 assumed that mortgage prices will always keep going up and mortgage will always be safe, and people took that for granted and start dumping toxic assets into it and took things for granted. A similar thing with Silicon Valley Bank. They just got lazy. We've lived about 10 years of stable, low interest rates, and their internal model assumed that the rate shift will not change dramatically. So they were not prepared for such a thing like that. As the mass public, even the regulators, the government will always, the government is not proactive, it's reactive. So does the general public. But here at Vector, we're very different. We're proactive. So we would technically try to sell systems to banks to prevent crises that will happen years from now. And in the banking world, what makes it different from other industries is every single decision you take in the boardroom, and it will hit and every single loan that originates today will have a very long impact on the balance sheet. It could have a lasting 5 to 10 years impact. Vector is definitely is very helpful from that perspective.
Great. Let's move on and talk about your GTM. I heard you give an example when you talked about messaging, you talked about cold outreach. So I'm wondering, How has your go-to-market approach evolved over the last couple of years? And I'm more interested in what learnings you have that you think is worth sharing with our audience about what you've learned.
In terms of go to market, which is the case for most companies, the strategy is how the strategy must be linked to the capacities of the technology that the company is able to produce at that stage or at this stage. Initially, our technology or the product was very limited 2 years ago. Now it has evolved. So what that means is that the door or the type of profile, customer profile that we're able to reach this year is wider than what we were able to reach a year ago, which is the same case for other companies like Amazon. But despite that, over the next 5 years, we will still be focused on providing solutions to smaller to mid-sized banks. Banks are the fit the profile of less than $5 billion of assets. We file that's technically the sweet spot where we would technically be deploying. And then in terms of that, we use multiple ways of approach. And I look at go to market from strategic perspective is tactical. So tactically, like how we tackle this is by sending emails, by running seminars, by locking up partnerships with others, companies, consulting companies, resellers, consultants, and advisors. That's technically how we go with that. But strategically, small, sit size, offer something around the financial planning and asset liability management at this stage.
Is there something that you have learned that you would like to share with other B2B founders who are in the early stage that probably can help them effectively plan their go to market strategy, Sadek?
From what I saw, there are two types of CEOs. CEOs that come from a technical background. Technically, they used to build this themselves. They're engineers that just it happen to be the CEOs because they're the founders. They're the one who came up with the idea, right? And then the second part are just like people who are not very technical. They're salespeople. They can talk and articulate and sell the product very well. Now there are two different gaps for type A and type B. Type A is more likely to over and focus on R&D without building a very solid pipeline. And that could drain the company resources because technically all investors want to see is a solid pipeline. Now with Type B, although they managed to lock in a lot of partnerships, a lot of growth, but which is great and it looks very promising for investors. However, after a few quarters, their client will start to complain that this is not what we've signed up for and the technology is not very robust and they start having high attrition. The company will eventually sink. And it's all about writing or finding the right balance. And that doesn't mean that the right balance can exist in the same person in itself. But it can be engineered in terms of making sure that the composition of the team has that balance, that there is a good harmony between sales, operation, and engineering. Don't overbuild, but don't oversell, and run something in between. And I think that's technically what we've learned.
That's well put. Um, Sadek, as someone who's been in the financial services space and someone who's building something with ML, AI, a lot of that, how do you see the trends shape out in the financial services space? And how are you at Vector preparing to adapt to these changes?
Yes, we are seeing the trends are noticeable in terms of how technology is being used at this stage. We in financial services, you will always find resistance between the old school and new school, which is technically there are certain. See, the average age in a technology company is about 35 years old. And I'm talking about average age of people in leadership and senior management. The average age in financial services for people who are in senior leadership is about 55. So there's about 20 years of gaps. And the older generation has start to accept the fact that it's a matter of existence and that the not only they have to adopt the technology but they also have to lead and mentor younger staff in order to take things a little bit forward. So we're seeing a lot of like changes in the way how humans interact with technology from that perspective, and people are now are more open into experimenting new things as well.
Wow, that's brilliant. What advice would you give to founders who are in this intersection between AI and financial services like you are?
The relationship between technology and financial services will always be faced with certain level of resistance. That's to be taken into consideration. However, given the fact that financial services is one of the largest markets in the world, it is also the most rewarding part. So it is not the easiest path to entrepreneurship for sure, but it's the most rewarding part. And this has to be dealt with a lot of grit, with a lot of persistence, a lot of stamina, and you got to believe in your idea. And then if things don't work out, make sure that you manage to leverage your level of skills and talent to be reused later in the same industry and not just to go into pure waste.
Sadik, this has been a wonderful interview. If you were me and interviewing Sadik, what is that one question that you would ask that I've not asked you so far?
You've addressed on a lot of aspects. I think every single entrepreneur got to ask himself is, am I ready to put up with the challenge, and am I ready to put up with the sacrifice, and how much will I be able to put up with and sacrifice with? Because every person tolerance is different, and I think it takes a lot of emotional, physical, and psychological skills to navigate the storms, because the failure is the default status and success is not the norm. So you really have to beat a lot of odds to make it.